Hey, how's it going, everybody? Mike Weber here, your South Bay and Los Angeles real estate broker, here with your market update for the beginning of May 2021. So just when you thought things couldn't get any crazier, of course, the market continues to surprise you, and we see just unbelievable price growth, virtually no inventory, and kind of almost an acceleration of the conditions we've been experiencing for the last several months. In fact, I'm not sure if we've seen anything like this in the history of the country. I mean, based on my knowledge. So it's really hard to believe. Now, there are some things that are starting to change. One of the things of recent that I read about was that a higher court judge ruled that the CDC ban on evictions is unconstitutional. And so it seemed like some landlords that are in distress, that have been having some struggles with non-paying tenants, might have had a little bit of help. And then I heard somewhere else that quickly got overturned by a different judge, or there was a different ruling that conflicted. So who knows what's going to happen with that. Another thing I did see is that more news on the government coming in with these first-time buyer programs where they're going to be giving $15,000 or $25,000 to buyers to be able to get out there into the market and buy a home. And so I read about a couple different programs. They will be different. There are those kind of programs that exist now, but there's generally a lot of red tape and paperwork, and it's a process, and the qualification standards are a little bit more stringent. I believe these new programs are going to be just like kind of across the board programs that probably a lot more buyers are going to qualify for, which of course is going to stimulate the market even further. Now, in our area, the median prices are so high, I'm not sure that these, $25,000, these $15,000 down payment assistance programs are going to make much of a dent in things in terms of what we're seeing, but certainly across the country, it's going to be highly stimulative. And clearly that's their agenda, is to continue to find ways to either push prices up higher or prevent them from coming down in the future. Interest rates remain pretty steady. In fact, they've started to come back down. Now, that being said, there has been some initial talk about tightening rates, maybe a possible tapering at some point in the future. Of course, Jerome Powell has consistently said that he's not even thinking about raising rates anytime soon. He believes there's no inflation that exists in the economy, and if there is, it's of course just transitory. So really the Fed stance seems to be they're just going to let this inflation run wild, and we could see a continuance of this extreme market that we're experiencing for a lot longer. Who knows? In any case, let's go ahead and jump in and take a look at the actual data, see what's happening in the market. We'll start out with Los Angeles County, and then we'll take a look at the South Bay beach cities. Let's go ahead and get started. All right, so getting started here, we'll take a look at Los Angeles County as a whole. And what we see here is that a year over year number for median prices is we're up 22.1%. And I mean, that is just so incredible. It's almost hard to believe that real estate prices could have gone up that much in that short of a time. I mean, we're almost talking 25% increase in the cost of real estate in the county of Los Angeles. So this has really been going on, I mean, for the last year and a half, and doesn't look like it's going to slow down anytime soon, unfortunately. If we take a look at inventory, we see this is really the reason why prices are rising so quickly. Inventory is down 33% compared to a year ago. And you have to remember, last year around this time of year was when we were kind of starting the lockdowns. COVID was just kind of coming out. There was a lot of fear out there. And so clearly there was lower inventory as a result of that. And now it's 33% lower than even at that time. Now, I think I showed this on the last market update. You can see here that inventory is below any point that it's been in at least the last, 13 years or more. Probably it might have been this low only before, when we had the buildup leading up to the last housing crash in 2006, 2007, 2008. So, I mean, we're dealing with extremely low inventory here. And the other thing to think of is that we're kind of in peak selling season now. So not only do we have no inventory, but we don't have any inventory at the time of year when we would expect to see inventory at the very least rising to some extent. And as you can see here on the chart, it's really not rising. Now, may we start to see a bit more inventory over the next couple of months? I certainly suspect we will, but I'm not very confident it's going to be enough to cause any sort of slowdown in price growth. Now, if we look at closed sales, that shows we are up 95.7, almost 100% on a year over year basis. And again, that makes sense because last year, this time of year, there was nothing happening. We were in lockdown. Homes weren't even selling. We weren't even allowed to show homes. So it clearly makes sense why we're seeing a huge jump in closed sales from year to year. Now, if we look at the South Bay beach cities, we see the same thing. In fact, it's more pronounced in the South Bay beach cities coming out of the local MLS there. We are up 24.2% year over year in median prices. So astronomical growth. I mean, literally it's spiking upwards. And again, as I always say, this is after many, many years of pretty substantial price growth, around 10, 12% averaged out over the last 6, 7, 8 years, whatever it's been. And now to see on top of that, 24% growth year over year, totally incredible. Doesn't look like it's going to slow down anytime soon. In fact, I was reading an article talking about Bay Area real estate, and a very average home, $1 million home, sold for $1 million over asking. So they're starting to see real estate sales up there going for $1 million over asking. Now here, I've seen quite a bit of stuff in the $150,000, $200,000 range. I'm sure there's much better examples than that. But even just the stuff that I'm seeing in my little world in real estate, I'm seeing stuff $200,000 over asking. So I'd imagine there's stuff $300,000, $400,000, $500,000 that doesn't come across my desk or I don't hear about. Now, if we look at the supply of inventory, we see that is down 29% compared to a year ago. And again, a year ago at this time of year, there was no inventory, right, to speak of because of COVID and lockdowns and all this kind of stuff. So here we have even less inventory than we had last year. And of course, that explains why if there's no houses out there and at least some people need to buy a house or really want to buy a house, they're going to have to pay through the nose to get one. Now, finally, if we take a look at closed sales, we see exactly like Los Angeles County, we are up 103% compared to a year ago. But again, that makes sense because nothing was happening and nothing was selling. So I hope this information was useful. If you haven't already, go ahead and click the thumbs up, click the subscribe button if you're on YouTube. Let me know what you think is going to happen as the next several months, year or two, unveil themselves. If we're going to see rates go up, if we're going to see changes in the market or much more of the same. And of course, if I can help you with anything related to real estate, reach out to me. I'm here to help anytime. So thank you guys so much for watching. I will see you on the next video. Take care.